Excel accounting practice problem. Create reports after second month of data input year-to-date financial statements. Get ready because we're about to excel. Here we are in our Excel worksheet. In prior presentations, we put together the worksheet from a blank sheet. Now we're continuing to enter transactions into it. If you have access to it, there's two tabs on down below, an example tab and a practice tab. The practice tab starting out where we left off last time. The example tab in essence being an answer key. Let's take a look at it now. In prior presentations, we've been entering 2 months of data into the system. And as we have done so, we've been posting to the trial balance. We have our trial balances at this point in time. In the second month of data input, we got a little fancy here and we were tracking the data on the month of February trial balance as well as a year-to-date trial balance. These two being the same on the balance sheet side of things, at least down to the liabilities, and then differing on the income statement accounts as those temporary accounts would close out if you're looking at just the month activity. That resulting in the equity being different, and then only showing the detail for the current month versus the year to date for the 2 months over here. This possibly will become more clear after we make the financial statements. We're going to start off making the financial statements using the year to date information, and then possibly do it again looking at the information for just the current month information, noting that if you're running these reports in software like a Quickbooks, then the date range will typically help you to see these changes, and we'll try to hopefully point some of that stuff out as we go through the creation of the financial statement. So if we go all the way to the right here, then we will of course be creating the standard financial statements that we all know and of course love, that being the balance sheet, and then we'll be moving to the income statement and the statement of equity. So let's go to the practice tab and let's do it. Let's do some hiding of some stuff first. So I'm going to hide from column Y. Why? Because that's the skinny column and we don't need it. And we're going to go all the way to the left to A to Y, right click and hide. And then I'm going to take those ending balances and put them into our beginning balances. So I'll take these ending ones, Control C, and I'm going to paste them in the beginning now. Pasting them there, 1, 2, 3. So there we have it, and then delete the activity. We don't need this stuff in the middle at this point. Removing that. And then what I'd like to look at is just this ending balance. I'm going to hide these other stuff here just so I could focus in on this column. That's what I'm going to use to make the financial statements from. So we're going to be hiding from A on over to AD, double A to AD. Right click and hide that stuff. Then I'm going to hide everything until we get all the way over to where our financial statements have been constructed. So I'm going to put my cursor on the skinny right here, on the skinny all the way to the right until we get to the financial statements, which is way, way out there, past BC column, way out in the right hand side of the timeline. Then we're going to say hide that stuff. And that's too close. I didn't want to hide. Now I hid the skinny. I hid the skinny. I don't want to hide the skinny. I like to have a skinny. I'm going to unhide that. I'm going to leave that skinny right there and do it again so that there's a little bit of space. You can't be that close. Can't be that close. So then we'll go over to this one. I'll hide the skinny. And then right click and hide there. That's better. I don't want to make the balance sheet uncomfortable by it being too close to the trial balance. Okay, so now we're gonna then record this information, and we really just have to add some accounts that we don't have last time. So if we go look at what we've got thus far, we've got the checking account, we've got the undeposited funds. Now remember, as you're constructing this, we might include undeposited funds so that we can display it. But if we were really to use this for display purposes, in other words, we would use all the accounts when we're creating the financial statements to make it easy to pull the information over from the trial balance. But if I was to give it to someone for external purposes, I would be grouping most likely the checking and undeposited funds into a cash and cash equivalents type account, for example. So you got to keep those in mind. We wouldn't really want the zero balances here, but it's nice to have the zero balances here so they can automatically populate when you're trying to make your financial statements be created automatically. We've got the accounts receivable, inventory, prepaid, short term. So it looks all these current liabilities look like they're still there. If I select these items, we're at the 232866. And so I added furniture. I should be down to here. So we're at the 134,866. That ties out here, so that looks good. Property, plant, and equipment, we made a change here because we did this other formatting. So now we get to kind of see this different kind of formatting. You could set this up in a few different ways. What I'm going to do is take these cells down below. I'm going to insert. So we've got some room to play here. We're going to insert and shift those cells down. And one way we can see this, so it's still kind of compacted, I'm going to make this a little bit wider, is I might say, okay, here's the furniture and fixture. Now we've got the accumulated depreciation related to it right underneath it. And then we could put the book value on the right-hand side, or we can make another row saying this is the net book value. But I'm going to put it right on the right here because that's a little bit more compacted. It kind of messes up what we do a little bit because now I've got these in the outer column. So we might then think, well, I should have another column so that I can put the total in the next column over. But I'm just going to keep it like this to keep it. So there's one way that you could display it. I might indent this again to say that that's kind of like a sub account. And then this is the book value. So now we're saying that is the cost. Here is the accumulated depreciation, which you might put as a positive or negative number depending on how you want to display it. But it's going to be a subtraction to get to the book value of the 90,005. So 98,000 cost. We then have the accumulated depreciation of the 7.5 book value 90,005. Doing the same thing then for the machinery and equipment, new accounts that we have added for a bit more detail. So we have that, and we've got the accumulated depreciation. I'm going to indent that one a little bit more, alignment and indent, pulling in the numbers of the 5,000, and this one is simply 0, but I'll pull it in anyway. I don't need the underline on this one, ununderline the font group, and then that's going to be total, which is down here. So I have my total. So I got to bring that total back up. So I'm going to delete these two, whatever, six cells, right click and delete them, and then shift them up. And then I need my subtotal over here like I did with this one. So let's do our subtotals is the sum of these two. So this is the cost, this is our accumulated depreciation, book value. Obviously we don't have any accumulated depreciation yet, so we just have the book value. And then we'll pick up the sum of these two on the outer column, and that'll give us our 95,500, which we can double check by just selecting these and say, does that tie out correctly, 95.5? It does indeed. So that looks good. So we'll keep that there. And then we've got the total assets. Now the total assets, we kind of messed things up because now we don't have just the outer column because I've got this subtotal happening here. Let's put an underline under this one, font group and underline. So I got to do it this way. The total is going to be the total current assets plus the property, plant, and equipment. Enter. There's the 230,366. We can easily check that and add these up. 230,366 right there matches. So that looks, I'm pretty confident in that. Let's go to our liabilities. So the liabilities, we had accounts payable, we had the Visa, we got the loan, we got a second loan we got to add in here. So I'm going to add another loan. I'm going to select these cells and insert, right click and insert, shifting down, adding loan number 2, numero dos loan. Now this is another one where you might then, if I was to put this together for external purposes, just group them together as one loan amount so that we can display it for external purposes. But I'm going to put them both in here so that we can basically see how the balance sheet can be constructed directly from the trial balance. If you were using something like a Quickbooks, then you might have set these up, say in the GL, so that these would be sub-accounts of a parent account, which would simply be called loan payable, giving you the capacity and ability to enter a more detailed balance sheet showing you all of the accounts, as well as a more summarized balance sheet, collapsing those items into a one account. So you can get a little bit more flexibility with accounting software to allow you to show you the detail and collapse it, which is a little bit more difficult when using something like Excel. So I'm going to double click on it. Let's put a negative in front of it. So there we have our 5,000. And then we've got the payroll. Payroll is there, payroll liability. And so that looks good. And then the payroll sales tax. And then we've got unearned revenue. Nothing's in unearned revenue, but I'm going to add it just in case something happens to it later. Again, you wouldn't want a zero balance if you were presenting externally, but if you want your balance sheet to be constructed automatically, it's nice to be able to add all the accounts to it so it will change and update. So let's do that. I'm going to right click on these items, insert, and shift down. So then let's add this one. This is going to be the unearned revenue. And then I'm going to say this is going to be negative because I've got to flip the sign, because if there was something in it, it would be a credit. And then I'm going to underline this. Let's put the underline, looks good there. Let's make this a little bit longer so we can see the activity. I got to add that to the total, even though it's 0, because I expect it to change later. And then I've got the long-term liability. I don't have anything in it yet, but I'm going to keep that as a placeholder for now. The current liabilities add up to that 82516. Does that tie out to these right here? The 82516, it does. That looks good. Total liabilities then adding up to the 82516. Equity, I'm going to first plug the equity this way by saying negative sum, which you could do very easily if you've got your trial balance set up this way, which I would call the correct way. But no, you could do it different. You could do your trial balance different ways. But if you do it this way, you could just negative sum up, and boom, you could double check your balance sheet nice and easily. We are indeed in balance here. So then let's do our income statement. Let's do our income statement. I'm going to do some more hiding. Let's hide this skinny. Hiding this skinny on over to the HG. Right click and hide. So now on the sales side of things, we had another account down here for the equipment rental. So we'll put that up top. And let's put that up top here. I'm going to insert, right click and insert, shift cells down. We've got equipment rental up top. Let's go ahead and add that dollar amount. I need a negative. It's got to flip the sign. It's flipping the sign. So we've got then the 2260. Looks good. We got to add that to the total. So the total down here needs to be including that amount. Cost of goods sold looks good. So we got the cost of goods sold in place. That's fine. And then the gross profit, subtracting those two out. So we can double check that by just selecting, for example, these four. 23157, 23157. And then this one, I'll just redo this one. I'll give myself a little bit more space and just re-input it. So I'm gonna move these down. I'm gonna drag it this time instead of cutting it. Just gonna drag it. And then I'm just gonna delete what I got right here. Let's just delete that. And then I'll just say this is going to be equal to the first one after the cost of the goods that's sold, the internet expense. And then I'm just going to copy it down till we get to utilities. So I'm just going to say enter, copy that down, roger that, copy that down to utilities. And then we'll put the amount in and we'll copy that down. The amount of the internet, 180. Copy that down to the utilities. Copy that, roger out, and then we're going to say font group and underline, and this is going to be the total other operating expenses, and indent twice. Pull that to the, actually I already have that down here. I don't need to type that again. I'm just going to pull this back up right there. And then recalculate the total equals the sum of these three. There we have it. Now we got this one other category before we get to net income that I'm going to put on the bottom. And the reason I want it on the bottom is because these two items are not items that are like part of my normal operations. That being a sale of investment, that doesn't happen that often. And the interest expense, we're going to say that's a financing charge, not really relates to exactly what we do. So I want to put them on the bottom of the income statement. I could do that with two other sections by calling it other expenses and other income. But I'm going to, since there's usually not that many of them, I'd like to kind of group them together in one other category, which I'm going to call other income and expenses. And then I'm going to say that's going to be the last two items down here. Last stop on the way to getting down to the bottom line where we want to go, the net income. So there's those two. We'll put the activity, I gotta say negative, because I would like the decreases, the expenses here to be negative, and the others to be positive, and the credits down here are income and expenses are positive. So that's what it's going to look like. So the gain is going to increase, the expense is a negative in this section, just in this section down here, because we have income and expenses in the same section, which is a little tricky. Alignment indent, and this is going to be total other income and expenses. And then let's make this a little bit larger, a little bit longer, and in underline, font group, and underline. We'll sum this up on the outside, sum, and let's do a double indentation, alignment, indent, indent, and then we'll pull this net income up. Control X, cutting it, putting it right there, Control V, and then we got to calculate it, which is going to be the last pit stop on the way down plus this, so it's just going to be equals the sum of these two. There's the 17,510. Does that match out? Down here it doesn't, so something is wrong. There's something that is wrong. The other operating expenses should be these. Other operating expenses are from here to here, 17,856. Hold on a sec. I have to do it this way. This equals the 23,157. I'm missing a subtotal. That's what I'm doing. I'm going to zero that out. I need to get, these are the total operating. I need one more subtotal along the way right here. One more subtotal, which I'm going to call, bringing that down, Control X, put it right there, which we're going to call net operating. Net operating income. And then we'll subtract the gross profit minus the other operating expenses. There we have, there's the pit stop on the way down. And then we've got that subcategory, and then plus this negative number, getting us to the 4,955, and there's the 4,955 here. So now we're basically got a multiple step statement here, which is a little bit more complex, but you can kind of get an idea of why we would do this. Oftentimes the accounting software would kind of do this in a similar fashion. So we've got the income set up here. This would be driven by accounting software by giving them an income type of account, giving us the subcategory, cost of goods sold, the big expense related to inventory if you're tracking inventory, gross profit, an important subtotal if you deal with inventory, typically a stop along the road. Then we've got the other operating expenses, which are just the normal expenses. If you set that up in like a Quickbooks, they would be normal expense items, which would populate here. Then we've got the total operating expenses, giving us another subcategory, stop along the road, of the net operating income. This is the net income from normal operations. And then we've got our other income and expenses, which in accounting software you would designate by having a separate account type, not as a normal expense or income, but as other. And that would put them down here in the second subcategory, giving us another stop along the road, and finally getting us to net income. Okay, let's make this blue and put our borders around it. Blue and border. We'll do that here too. And then finally, we've got our statement of equity. So the statement of equity is now going to be our beginning balance, which is equal to the beginning balance right here. Notice that equity right there represents the equity from the prior period, which should be the same unless there's activity in the equity. I got to double click and put a negative. Unless there's activity in the equity account, which might be the case if you had draws or investments. But we put the draws and investments in a separate account. We didn't have any draws, and we only put investments in this other account. So that other account is right here in the change. And then the change is going to be the net income as well, which is being picked up from down here. So that should give us an ending balance of the 147,850, which we could double check very easily over here by just selecting all the blue. And that would be the 147,850. That amount should also be on the balance sheet. So I'm going to unhide some cells and double check that. Putting my cursor from B to HO, right click and unhide I'm going to go all the way to the right where our financial statements are again, all the way to the right. And so now we can do our last double check here. I'm going to hide some cells. I don't need these blank cells here. Let's hide from GY to H. I don't need to hide those. I'm just going to delete those. I don't know why I have this big space here. Let's go ahead and just delete that. Delete that. Hopefully I didn't mess anything up. So now we could see down here that we are in balance. I'm going to do one last thing and take this equity from the ending equity here instead of summing it up, and we should still be in balance instead of taking it from the trial balance. So we're still in balance and everything ties out. So we got this double check number. The net income is down here, 4955. That 4955 is in the statement of equity, 4955. And the ending equity here is tying out and is included in the equity section on the balance sheet. Those are your check figures, making sure that you have constructed everything correctly. Note that in QuickBooks software, you often don't have this statement of equity because they try to kind of combine the income statement and balance sheet by basically putting net income into a category section on the balance sheet. I think that's trying to give you, a more simplified look. It has its pros and cons, but beware of that. You might see that in accounting software. Now we're going to do the same thing for just the month of February, and the balance sheet will in essence be much the same. We'll have a change from the income statement and the statement of equity, just looking at the activity instead of 2 months back, the year to date being 2 months, January and February at this point, to just 1 month back. So we're in the same point as of the point in time, balance sheet, but instead of looking 2 months back for the activity, the performance statement, income statement, we're going to look 1 month back just for February.